Wayne, great to have you back again. And there's a hell of a lot going on in the European energy markets, in particular around natural gas. And a lot of the issues, I mean, they were building over a long period of time, even before the war in Ukraine. So before we talk about things like Nordstream, could you just give us a background on what's been going on in the European energy market and with natural gas?
Yes, good to see you again too. And it's been like a soap opera or a pantomime of late. I mean, as you said, things were already, in terms of Russian gas flows, were already falling even before the war started, as basically the Kremlin, or should we say Gazprom, tried to get Nord Stream 2 in operation and bypass Ukraine. So volumes were already falling. The actual transit contract has started to fall already. Fast forward to obviously the war happened, and then all the political ramifications of that in terms of sanctions, etc. Then we had a situation where gas flows actually started to fall when Gazprom introduced the rubles for gas payment scheme. This scheme basically said that European buyers need to pay via a system that enables them to deposit into euros, that get transferred into rubles, Gazprom get paid. Several countries didn't abide by this, gas flow to them countries were cut. And then what we saw was Nord Stream 1 flows started to fall. Now, Gazprom cited a couple of reasons for this. First, we mentioned this rubles for gas scheme. Then, of course, they mentioned that there was problems with some of the compressors at the pumping station for Nord Stream 1. Now, these compressors help basically get the gas through the pipeline at the right temperature and capacity. So Gazprom started to turn the flows down via Nord Stream 1. This really put the sort of frighteners up to Europe, because basically we need Russian gas to fill our storage levels. Without Russian gas through Nord Stream 1 and various other routes, we won't be getting European gas storages filled to the mandatory requirement. So this already started to set the alarm bells ringing. We saw flows at about 40% of normal capacity, so a 60% drop in flows via the pipeline. This caused prices to spike. And of course, Gazprom cited sanctions, they cited repairs to the turbine, they cited a number of reasons as to why gas was not flowing at the required level. Then we started to approach the maintenance period. Now, typically every year, Nord Stream 1 goes under maintenance from around in July, normally 11th, around the 21st, 22nd. As the maintenance started, prices started to rise further. A lot of comments, whether it from Russia, whether it from European politicians around the capitals of Europe, all concerned about would Nord Stream flows restart and at what level. Most in the market thought they wouldn't restart at all, that would see a complete cessation of flows, and that Gazprom were using Nord Stream 1 flows to sort of weaponize and sort of hold Europe hostage. And to be fair, as I mentioned, without those flows, we'd find it very difficult to refill our storage levels. So in the build-up to Nord Stream 1 restarting on the 21st, every day there was a different comment. There was constant volatility in the markets as participants grappled to wonder whether we would get the supplies. The day before, Gazprom said that flows will resume. They didn't give a number at all. Most people then started to think, okay, we might see flows at the least back to previous levels. The next day, flows started to ramp up. We saw nominations, and of course, these flows then returned, but only to the pre-maintenance level. So the pipeline is still operating at 40% of its capacity, and again, they're citing turbine issues as the reason why. So this is now an ongoing story.
And so this is also, there's a fragility in here because obviously there's not a lot of alternative ways that we can source natural gas. So what are the ongoing issues? Because this sounds like a very, very volatile scenario. Going forward, are there any solutions to this?
Well, at the moment, again, we've had a few. It's kind of like smoke and mirrors going on. You hear from Siemens, you hear from Canada, you hear from the Kremlin, and there's a whole lot of stories. But in a nutshell, basically, these turbines, typically built by Siemens, go to Canada for repair. Routine maintenance in Canada. Due to sanctions, Canada couldn't return this turbine. They made an exemption. Of course, that could be changed, but to allow this turbine to be sent to Germany. Documentation was received. The turbine then made its way to Germany. It got to Germany, and typically then it would make its way to Russia via Helsinki. Then we had the situation last week where the actual operators, Siemens, said, well, we've got the turbine, but we need Gazprom to tell us what location to send it to, and we need necessary documentation. Gazprom come out and said, well, we don't need to provide documentation. You need to give us documentation showing us that this turbine is exempt from sanctions. More to and fro-in. Then you had Vladimir Putin speaking, which only added to the concern. So he started saying that, yeah, we've got problems with this repair. We're very concerned about the quality of the repair. We're also concerned because additional turbines need to go into service. And if we don't receive the repaired turbine on July 26th or around that date, we're going to cut the flows further. So instead of at 40%, they're talking about from tomorrow it being at only 20%. So again, that's caused even more consternations. But what's transpired over the last 2 days, the turbine now is supposedly on its way to Russia. The Kremlin spokesman, Dmitry Peskov, literally just said, the turbine is on its way. We'll get that turbine, install it, and then we'll start looking at gas flows again. But there's still no firm indication at what level. Apparently, it will take 3 or 4 days for this turbine to be installed. Then you've got additional turbines that need to go and get refurbished. And if you listen to what Vladimir Putin said last week in Tehran, he was saying that it will fall to 30 MCM tomorrow from 60 MCM today. So there's still a lot of concern. The markets are still trading higher, even on the news that the turbine is making it. So in terms of what are the options, we've got a couple of options on the table. Reducing gas demand. EU has already come out with a proposal, rejected by many, that we cut gas demand by 15% using various measures. Germany's already dimming street lighting, banning the heating of indoor pools this winter. So there's lots of different factors in play. Also LNG, we're importing a lot of LNG from America, and thanks to fall in Chinese demand, we're able to import a lot more than we typically would this time of year. Asian demand is still suppressed. So what we're seeing now is a lot of LNG is coming to Europe. So that is sort of kind of helping, but take a step back. Whatever happens, if these flows via Nordstream don't go back above 60% in the next couple of months, we won't reach the mandated storage requirements, which actually the German government just lifted by 5 percentage points now. And they already came out this morning and said if these flows don't increase, we won't be meeting our storage targets. So a huge risk ahead for this coming winter, especially when we don't know what the temperatures will be like yet.
So it sounds like, we've got a shortfall in what we need for our storage in the whole of Europe. And we're kind of reliant on, Asia being sort of in quasi-lockdown at the moment, because obviously that could come back and they could go back to their normal demand. And obviously these are all offsetting. We're already hearing of certain countries which are desperately short of energy requirements themselves because they're being diverted to places like Asia and Europe. So going forward, just focusing back on Europe, potentially, will we end up with rationing? Will we? People may remember things like the 3-day weeks in the UK back in the 1970s. What sort of scenarios? What are the sort of scenarios of the blue sky optimistic scenario all the way through to the bearish scenario? What sort of things can you see as being that potential kind of list of what could transpire over the next 12 months?
Well, on an optimistic front, you're looking at a warm winter in both Asia and Europe, which we're actually, we've had a couple of mild winters, so we're due a cold one. So a really cold snap I'm talking about, akin to the beast of the east of 2018, puts us in a perilous situation. Gas storages would be rapidly emptied, and this is, of course, on the assumption that Russian gas flows continue to be at 40% levels. We're going to be in quite a bit of trouble. On the flip side, in terms of gas rationing, we won't come to that, especially in the UK. It has supply-side measures, whether that's interruptible demand is cut. Certain big producers get their supply cut automatically, and they've already got cheaper gas at the moment as an incentive for them to be allowed to cut. The UK now is also exploring the possibility of reopening Rough storage. This is the biggest storage facility. So this was meant to be mothballed, but now due to the price dynamics, that's being brought back online. Decision is still to be made, but that can be back online this winter, giving more supply security to the UK. Europe's, on the hand, is a little bit different. UK prices are a lot cheaper than European gas prices due to the UK not being as reliant on Russian gas. So in terms of Europe, the danger's a lot stronger. You've got low hydro levels across Europe. We've had a very poor rainfall, so hydro generation's low. You've got French nuclear concerns, again, linked to the hot temperatures and also to an aging fleet. So that is another factor. So what we're seeing here is lower Russian flows, stronger demand from the power sector, a potentially colder winter in tandem with a reduction in LNG flows. we're in quite a lot of trouble. I mean, you've seen a lot of these measures from Europe. I think these measures would definitely be coming into place. So you'd see cuts to large-scale industrials, your ceramics, your bricks, your paper, plastic, all these sort of industries are going to have to cut. Now, in the case of Germany, it would be catastrophic for their industry. There's already, if you look at it, if the storages are not full, gas doesn't continue, we're going to see, we've already seen inflation rise. This would probably put another 3 to 4 not 3 to 4% of German GDP, which probably equates to around another 180 billion hit on their economy, which they don't really need. And another, what we've seen recently as well, is the euro trading against the dollar, close to parity. That raises the import costs of LNG, which is another factor this market doesn't need at the moment. So a lot of the risk is skewed to the upside. And if you look at the way the market is priced, that shows you that. And if you look at the spreads for next year, summer's trading above winter, which really tells you that, we're far from out of the woods, and we're at the mercy of quite a few things at the moment, which goes to show how sort of over-reliant we have been on Russian gas over these years, and now it's really coming back to bite.
So basically sort of summarising what we're saying here is that it's a very, very tight situation. It's all down to effectively potential exogenous shocks over which Europe has no control. And I mean, Germany's already talking, Germany's clearly already flirting with recession, but it sounds like for the next, at least through winter, we're going to be constantly saying we're in or we're out of recession, with potentially the recessionary downside more likely in this current environment.
Correct, yeah. It's just, again, though, that we've left ourselves in a situation with the over-reliance on Russian gas, and of course with the ongoing geopolitical situation, the tit-for-tat sanctions, at any moment they could just turn that gas off. It really is, as you highlighted, a perilous situation as we head into sort of the most demand-intensive period of the gas year, that being the winter period starting October the 1st.
So as you can see, this is a very volatile situation, to say the least. The German IFO data suggests the economy could already be in recession. The rest of Europe is on equally uncertain ground, although not all countries are as reliant on Russian gas exports. But this is likely to weigh on the euro through winter, even if the Fed does do a dovish pivot. And if you've got any questions about this episode, financial markets, or the economy, please put them in the comments section or send them to fmt@lseg.com.